Hello everyone, Dave Landry here from DaveLandry.com, and this is Trading Simplified. So what we talk about? Well, as you know, every now and then I'll get on a kick, and lately that kick has been acceptance and how we need to accept certain things as part of the trading process. And believe me, it's not easy, and I struggle just as much as everyone else when it comes to that. But what I'd like to do this week is interrupt that programming for just a little while, because we have a lot of great trades and a lot of great learning examples this week. I'm getting asked a lot of questions about what, when, why, and how. Housekeeping, I do take requests. As I've been saying ad nauseum, what I have been doing lately is covering those in my Thursday show, and I'll give you a link to that in just one second. This show, due to the pandemic, is pre-recorded, but we're still doing the weekend charts live, and it's a little bit more freer format. If you need to reach me, DaveLandry.com is my website. If you want the slides from this presentation, which includes setups and money management and many things I'm going to discuss today, go to DaveLandry.com/StockCharts. We have, I think this will be our 56th one, so it's 56 presentations. If you need to reach me, go to DaveLandry.com/contact. Also, in that link for our StockCharts, DaveLandry.com/StockCharts, I'll give you limited access to the members area, which includes a free market timing course and an introductory course to the methodology, along with all three of my books for free in PDF format. So getting a lot of questions: where to enter, why did I pick this stock, when to get in, and so on and so forth. Now, keep in mind that this format is a very limited format that we're doing now, and I do things in other formats. For instance, as far as what stocks to trade, I spent 14 hours in a course just doing that, about 8 hours of instruction, and then about another 6 hours over a period of several months, picking stocks, walking you through the process, and then seeing how they worked, good, bad, and indifferent, and using a little bit of money management in the whole process. The other thing you could do is obviously go in and watch these shows, and I'll give you a link to that in just one second. But the bottom line when it comes to the markets or stocks, you want something that trades cleanly and ideally persists, tends to go up day after day after day. And by cleanly and persisting means that the chart does not look like an electrocardiogram, zigzagging all over the place. There's some structure to it. And in addition to persisting in the trend, you also want to see some acceleration in the trend, and then you want some sort of obvious setup. When we get towards the end of this presentation, I want to show you how Bitcoin and Ethereum recently set up as a very obvious setup, and that's a good place to start. If you get that down pat, then you're well on your way. Now, as I alluded to a second ago, what I'd recommend you do is see all of my methodology and action segments, and I realize it's going to be hard to type this URL, but if you download the slides, you should be able to click on it, and that'll bring you to this page here that I put together. And these are all my Trading Simplified shows here, and I think going through these will help to get you up to speed on the methodology, in addition to all those other things. I do have my service archives. There's some holes in the archives, but I have about 20 years total. And you can go to DaveLandry.com/archives. I think 2020 would be a good year because we had a bull market, a bear market, a quick, sharp recovery, some choppy markets, and then another bull market. It's just been absolutely ludicrous. Even ludicrous would say this market has been ludicrous. But go and look at those service archives, and that's where all the mystery charts come from. I show you them in real time, and then most of those, I should say, are in my trading service, and I follow up in this particular show. But if you can go in and if you want to see them all, warts and all, you can go to that link. There's a link here for the weekend charts. Sometimes I forget to update the date, but the link once you get here to the GoToWebinar to participate should be correct. And you can come to my weekend charts and ask questions, or better yet, become a gold member of my website, which is really cheap. And you can participate in the Facebook group live. You can ask about a question there, and we've got a really good group of traders, and we'll pick apart your trade. If you're willing to put your trade up there, we'll be happy to analyze it, good, bad, or indifferent. And believe me, you could save a lot of money. If we don't like your trade, you might be able to save a lot of money by avoiding a mediocre trade, and that'll help you to pick better and better stocks. So the question I'm getting quite often here too, as far as the where, it's like, where do you place your stops? We did do a show mostly on this, and I do have a money management module just on this. So there's a lot more to it than I'm kind of showing you on the surface here. But the bottom line is you have to ask yourself, where would you be wrong based on your premise? And the entries, I'm getting questions on entries. Well, the entry needs to be far enough away to also not trigger on noise alone. And instead of having it just above the high, unless you're trading a textbook type of setup, you want it far enough away to avoid the normal noise of the market. And if you can figure out the entry and you can figure out the stop, which is a little bit harder, where you're going to be wrong, then you just subtract the entry from the stop. That's going to give you the risk, and you add that back to the entry for your initial profit target. We'll go through a few examples. And then the trailing stop, we're looking to get to break even on that trailing stop after we take our initial profits off the table. In other words, half. And Charlie Kirk, he was kind enough to invite me to present and be guest of honor at his retreat a couple of years back in St. Lucia. And when I showed him my money management, he said he liked it and he called it free rolling, which I thought was a good way of putting it. So basically, you're trying to establish these free positions. And by the way, that's a secret to the market, is getting these free positions, so to speak, in, and then riding out that trend for a long time. Now, many times you're not doing anything with that trailing stop. You just leave it where it is. And if the market goes up a little bit, then that trailing stop just gradually loosens naturally. So let's jump into the mystery charts and the methodology and action. And believe me, I have about 6 or 7 more I want to show you that I'm going to be able to show you today. So we just had a plethora of fantastic setups as of late. So here's ALGM. And I want to show you this one because it really hasn't worked out fantastically just yet, then I think it might be a good example to follow up on. Now, I did trade this one as an initial IPO setup, which I'll show you with some other charts in just one second. This is a pattern I call a first deep retracement. It's when an IPO takes off and then has a very sharp correction. And usually being a keyword in that sentence, but usually if they begin to rally out of this correction, they'll go back to their old highs and beyond. The IPO gets a little bit ahead of itself. It retraces and knocks out a lot of nervous Nellies, and when it begins to rally again, it attracts a bunch of traders, and including those nervous Nellies who are forced to get back in. Remember, everything we do has a psychology involved. I recently started reading Devil Take the Hindmost, and it's kind of interesting that he talks about how the investor, and this is going all the way back to Keynes, and Keynes said that the investor is more interested in forecasting an asset over the course of its lifetime, whereas the speculator is more interested in forecasting the activity of the psychology of the market. And what we're trying to do through this money management is get that piece out, and then, I hate to use the word hope, but hopefully through this free rolling, be able to stay with the position for a long time. Now, getting back to this ALGM, we have a buy here, a stop here, initial profit target up here. And this is what's happened so far. It hasn't set the world on fire, and it's been up and down since, but we have a small profit at the time of this recording in this one. Now, anything I show you, never say never, but as I preach, I like to show you things that have been mentioned ahead of time, either directly through my trading service or through my Facebook group. So here you can see where we're talking about VTRS as a possible IPO, and I chimed in and said that I had recently gotten long, actually about 2 minutes after that post went up. Anyway, this is the buy at B pattern that I often talk about, and we don't buy IPOs when they come out the gate, or as soon as they come out of the gate. We wait for at least 5 trading days. So if it was on a Monday, we would wait until at least Friday's close, right at the close, before looking to get long. The other rule, and there's a few other caveats too, we're not going to have time to get into them all today, but one of the other rules is that the high for the week cannot be set on day one. So here we have day one, and obviously that's the first high we have to go off of. Day two, notice that day two took out the day one high, so that day one high rule is no longer applicable. So now all we're looking for is a new closing high. Now, we do get a new closing high on day 3, but remember what I just said, we're not going to buy the stock until at least the close of day 5. So we're going to wait for 1 week of trading. So day 4 comes back in a little bit, and on day 5, we have a really decent rally, and the stock closes at an all-time high. So that constitutes a buy. Now, in this particular case, I actually was a little bit late. I actually had to get in after hours, and thank goodness the stock has plenty enough volume for that. and that's an IPO. Now, you can see that it hasn't really set the world on fire just yet. In fact, I'm at a loss at the time that I'm doing this recording, but I like to show you some things, warts and all. I love showing you big winners. I'll show you one in a few minutes that went up 100%, but it doesn't always work. And that's to temper your expectations a little bit, as opposed to these get-rich gurus out there. I like to ground things in reality. So far, not so good, but there's still a little hope, and I use the word hope, but let's just see how things shake out. Now, here's another one, 1, 2, 3, 4, 5. We have 5 trading days, but the 5th day, in this particular case, it did not close above the day 1 high, because on day 1, the high is still relevant because that's at the high for the week. And then you can see it just kind of meandered around quite a bit. Also, this is a bank, and I have a hard time getting excited about banks, but right at the time this actually triggered by breaking out of that range. By the way, I'm not a breakout trader, I'm a pullback trader, but in IPOs, I do follow a pattern or two, specifically the buy at B, and also the buy at B with the 5-day SMA Landry light pattern. Those do have breakout characteristics to them. In this particular case, I did like the way that the range had begun to expand, and I like the breakout, and also technically it was a buy at B. So this is where I bought in. The stock begins to rally up. I sold half here, okay? And here's the actual transactions. You can see got in around 12.94 and then exited around 14.29. And remember, we take half of our profits, and at that point, we bring our stop up to break even. So again, we bought here, we sold here, and then when we hit that initial profit target, we make sure our stop is up to break even. We may trail it up a little bit before that, and ideally on a one-for-one basis. And in more recent years, I've been trailing a little bit more, less than that, in order to ride out some of these corrections. Markets aren't quite as clean as they used to be. But anyway, you can see that there's a trailing stop. We have a free position. We're free rolling, so to speak, and hopefully be with this position for a long, long time. So there's a trailing stop there. And I'll follow up with this one in coming shows. Here's another one. This was recommended in my trading service earlier in, or I should say in the middle of November. It was a bow tie. Entry was at 7, stop at 540. Initial profit target of 860 for a risk of 1.60, 1.6 points, and it is a bow tie. This 1.6 points seems like a lot, but that's what this stock called for. So if we map that out, there's your entry, there's your stop. Also, if you have a good eye and are trained in classical technical analysis, you'll also notice that this was a cup and handle. A lot of times, patterns such as first thrust and bow ties will set up within a bigger picture pattern such as a cup and handle. Go in and watch the show we did on transitions, which was like the second or third show, if memory serves. Now, if you have a good eye, you'll notice there's a lot of overhead supply over here, and that could possibly cap your gains. But if you're getting in around 7, and it goes all the way to 11 or 12, it starts hitting that resistance, as I explained. And you could go in again and watch the service archives to see my video on this particular day. That would be a good problem to have. And if we take a look at what happened, it began to take off. It did trigger on a bit of a gap, but the gap really wasn't much above the entry, so it was not a discretionary call on whether to get in or not. We hit the initial profit target. We brought that stop up to break even, and then it's kind of meandered since, but we're still along for the ride. And we'll see what happens and follow up in future shows. So again, this would be another free position. Now here we have a former mystery chart, and it was a first deep retracement. And that's, again, an IPO pattern where the IPO takes off and then has a very deep retracement. I call that an FDR. Again, the market takes off, comes back in. And there are the parameters up there. 3 points, entry of 20. A stop of 17, an IPT of 23 for a risk of 3. If you go back in and watch the show that was done sometimes around October 13, again, go to that aforementioned page, you'll see this particular slide that I'm showing you here. So following up on that, again, entry was here, stop was down here, initial profit target up here. Notice the entry, we give it a little bit of wiggle room to avoid being triggered on noise alone. Notice the stop is down below the current price to a level where if it did trigger up around 20 on that entry, it came all the way back into 17, 3 points lower. And then it would suggest that the position has failed. Where would you be wrong? So following up with this one, you could see that we made 11% on the first loaf. Didn't quite get that full 1% out. That's because it triggered on a bit of a gap. And that's not where the money is, but we do want to try to make a little money on that swing trade. We made 2.32 points, or 11% and change. And on the second loaf, we did give up a lot of profits in the end, and that's one of the pitfalls of trend following, especially once you get into that longer-term trend following mode. But still, overall, it stopped out at a 95% gain. So that's much better than a poke in the eye. So again, the buy was back here. Initial profit target was hit on the following day. At that point in time, we bring our stop up to at least break even. And then we trail it fairly loosely on the remainder. Remember, this is a free position, so to speak. The worst could happen, barring overnight gaps, is we stop out at a scratch of the remainder of the shares. And the best could happen in a case like this is we ride the stock higher for about 100% gain. And again, we stopped out on that trailing stop. Now let's take another look at another buy at B pattern and IPO. And I do think I mentioned this one in a prior presentation, either here at StockCharts TV or during my weekend charts. But you can see in this particular case, the high was set on day one, and then the stock begins to trade sideways. And what's the rule? Well, we have to take out the high of day one on a closing basis and also close above that high. So right here we have a new closing high, but it's below the high of day one. So there's no trade just yet. And then the stock begins to meander sideways once again. Now, when I designed this pattern, or discovered this pattern, so to speak, I was really looking to get in on, let's say, day 5 or day 6, or certainly within the first couple of weeks. But I later discovered that this pattern does carry forward for quite a long time. And I think you'll be amazed if you go in and study some IPOs and notice what happens when it makes a new closing high, maybe 6 weeks or even as long as a year from now. A lot of times stocks will have a really nice follow through when that happens. So I ended up buying at this level here in a little breakout. And remember, this is on the close. So let's say it would have broken out and came all the way back in. By the end of the day, it would be no trade. But in this particular case, it did close above that day one high. And I look to take profits in this particular case. I'll look to take profits, I should say, in this particular case at 2 points. And you can see, luckily, in the following day, it did rally up enough for us to take partial profits on that. So on roughly a 100K account, you'd buy 1,000 shares and looking for a 2-point IPT, also 2 points risk, initial risk at least. When you're up 2 points, you take off half your shares. So that's $1,000 on a swing trade in one day. Much better than the poke in the eye. If I did that on every trade that I took, at the least, you'd probably never see my fat earth again. But you can see that it did meander a little bit, but then finally began to take off once again. And just on a mark-to-market based on yesterday, we did the screen capture. I was up 15.18 points times 500 in this particular case, in this particular account. I try to use one account as my model account just to show you that it can be done and what it looks like. So that's a $7,590 gain plus $1,000 on a swing trade. So at the time of this recording, or at least during the screen capture, the trade overall was $8,590. Now keep in mind it's a 100K account, which is based on, so that's about 8.6%. So as you can see, one stock can have a really big impact on the account. Now, one thing I did with this particular position, and I was a little hesitant to show you because the name of the show is Trading Simplified, but in this particular case, I decided to do something that's maybe not so simple. So I came in and the market rallied up. This is a 5-minute chart. This was back on Friday, or I should say the Friday after Thanksgiving. And my big concern was, if you take a look at the daily chart, now obviously I didn't know what the whole bar would look like, but I saw this gap in there, and it was after a pretty darn good run. And my concern was that it might rally a little bit further, but could certainly form an opening gap reversal. And I would actually trade these opening gap reversals with a lot of caveats, sometimes for a day trade, ideally in the direction of the trend, except for something in the indices. And that's, I guess, fodder for another show, or come to the Facebook group and we can discuss that there in more details. Anyway, so as it gapped higher, I just really didn't want to give up all those gains. And so I decided to go ahead and bail on my shares, but I didn't want to lose my position. So within about a minute or so after selling those shares, because the market immediately began to rally back up, I went ahead and bought some short-dated calls that expired within a few hours. Now, these were not cheap, and it was very painful to do this, but I didn't want to lose my position. And then as the stock began to implode, by the end of the day, it looked like, or I should say by the middle of the day, I should say, I began to worry that I needed to get back in. I didn't want to try to catch that falling knife in case it just kept dropping and dropping and dropping. So what I actually did was I put in a trailing stop to buy back my shares, and then the market began to rally, and I triggered back in to my shares, and I took them home again, so I got back my position. Now, this is what all the transaction looked like, and I did this across multiple accounts, so there was a lot going on, and I'm going to get to that in just one second. But notice that I was only long 500 shares, and I actually bought 6 calls. Well, I was trying to get a little cute there to see what happened. But look at this ridiculous premium on these calls. But again, I didn't want to lose my position. My thinking was, if the stock retraced, then, in other words, sold off, it would sell off much more than the price of these calls to keep that position. The calls would help me to keep the position. Now, I ended up buying back at 27.14, round numbers. So I avoided a $3.67 loss, 67-cent loss, but I did have to pay for those calls. So if we do the math on all that, I avoided an $1,835 loss, but I did pay for those calls, which turned out to expire worthless. So net, $10.57 is the difference. Now, if we look at the mark-to-market on the shares that I bought back, by the end of the day, I was up half a point, or 0.52. So that's another $260 added back in. Now, I got to thinking, am I really comparing apples to apples? So I think a better way of looking at this would be the day-over-day price change. So if you did nothing, the stock was down $1.39 on a day. So in 500 shares, you'd be off $639. Now, if we go through my transactions of selling at 30.81 and subtract the prior day's price from that, you would end up with $1.76 in profits times 500 equal $880. That's actually locked in. Now, you did pay $777 for the options, and you bought back the shares. Remember, I bought back the shares for a half a point gain. So apples to apples, we add it all up, and we come up with 880 plus 260 minus 77.7 equals 283 versus a loss of 639. So we add all that together. The net price change versus doing nothing was $922. Now the question is, was all this worth it? And my answer is I don't know. I'm just kind of throwing it out there for discussion, and I'll be happy to noodle with you guys on this and see what you think. But you have to say, well, is it a $922 improvement on the trade worth it? Well, I don't know. And one thing you have to be careful of, and Annie Duke calls this resulting. It's an outcome bias, but a simpler way of explaining it is resulting. Does the result mean you did the right thing? And you have to be careful when resulting. Now, what I did was, here I am preaching a very simplified trading, and I added a big layer of complexity. And when you start messing around with options, you start adding more and more moving parts. And there's a lot of what ifs that come into play. What if the stock would have just flat out taken off? Then that money that I put for the options would have made money, but I would have lost that premium, okay, by the end of the day. The other thing that I noticed in doing all this was the mental capital. It really stressed me out to sit there and watch a screen pretty much 3 or 4 hours out of the trading day, which was nearly the whole trading day on Friday because the market was only open half a day. Now, as I preach, every time you make a decision, you add stress to your trade. So more decisions, more stress. And I may be tempted to add complexity in the future. Now, here's the other thing that comes into play too. My cost basis for this stock has jumped about 10 points or whatever the case may be. And at the time I'm recording this, I actually have a loss in this position as opposed to a gain. And every time you look at that loss, it creates a negative observation. So there is a potential by increasing my cost basis on this, forget about taxes and all that other good stuff, just the negative impact of looking at a loss on something that used to be a winner. Now I want to show you real quick a TKO in Bitcoin, and you can see that it's also a Landry light pullback. And notice this nice trend followed by this TKO move. The trend should be very obvious. You should be able to draw a big blue arrow in the charts. And also one way to qualify the trend, not necessarily quantify it, but to qualify it is like, okay, let's make sure we have at least 10 bars or so of Landry light, meaning that the lows are greater than the moving average. And in this case, it's set up as two different setups. One, a TKO, and two, notice that we went back to zero Landry light. In other words, we intersected the moving average before beginning to take off. Now, if you were trading this as a textbook TKO, in this particular case, I would qualify this as a textbook TKO because you have a nice big knockout move all the way down to 30-day EMA, which I think would be a great point of reference and fodder for research on TKOs. But anyway, you want to enter right above the high. A stop will go right below the low. Now, as mentioned earlier, your initial profit target would be the entry plus your risk. And risk is obviously entry minus the stop. If you were trading this as a Landry light pullback, and the entry would be here, a stop would be roughly around here, and then you could broadcast that up for your IPT. If you take a look at Ethereum recently set up as a very similar pattern. I'm long both Bitcoin and Ethereum. Well, that's all my time. As usual, I want to thank everybody for watching. If you have any follow-up questions, davelandry.com/contact. And I would encourage you to go to this link, davelandry.com/StockCharts, and get up to speed on everything. And I think that's going to help you out tremendously. Well, thanks for watching, and may the trend be with you.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.